All right, back with another video. So I did get YM added to the trio for quarterly theory so that I have data for ES, NQ, and YM. But before going into the trio, I thought I would separate them and first do the daily cycle NQ versus YM and the daily cycle for ES versus YM. So this video is going to be daily cycle baseline, which is asymmetrical and symmetrical, versus symmetrical sequential SMT for the pair ES and YM and NQ and YM. Okay, so the daily cycle syncs to the 15-minute chart in quarterly theory. The data period is for 2 years, which is from March 4th, 2024 to March 2nd, 2026. This excludes Monday, quarter one, which is Sunday's open, because I wasn't sure if we should look back to Friday quarter four or not, but only one quarter missing from the data. And then I did have a roll window exclusion. So every, I don't know, few months, there is a contract change with futures contracts, and the DataBanto data that I purchased and TradingView, they roll on different calendar days. So since they do that, I exclude the first 3 calendar days just for sake of accuracy. Okay, first thing we'll do is we'll look at the charts. We'll look at what the asymmetrical and symmetrical sequential SMT is, and then we'll go into the data. So here's a chart. We have ES on the left side, YM on the right side. Okay, here's a good example of a sequential SMT on the daily cycle. So top is daily cycles, and this one is going to be asymmetrical because in this quarter, quarter 3, this level right here is the high of that quarter for both assets. So ES, YM, the high, and as you can see right here, we break it on ES, whereas it is respected on YM. Okay, and so the way the code works is it's coded so that the next 15-minute candle is the entry candle, and we enter on the asset that failed to break. So in this case, YM didn't break its previous quarter high, so this would be the asset that takes the trade. So, and then where it breaks would be this one here. Okay, then stop loss going to be, forgot how many ticks it is above the previous quarter high, but I have it in the data, so I'll show you when we go through the PowerPoint. And then basically we just measure from there, whether it's 1R, 2R, 3R, whatever. So that's that. And then asymmetrical would be if, let me just get an example. Then here's an example, ES, YM, or asymmetrical. This is an asymmetrical sequential daily cycle SMT. All right, and it is on the 15-minute. So as you can see, the previous quarter right here, the high on ES here, whereas on YM can be right here. This is considered asymmetrical, and this is actually going to be in the baseline results when we go through the PowerPoint. So the data shows our entry at 48,025 on YM. So YM's the asset that made the failure swing, and it happens at 30. 15 it breaks, 30 is when the entry is triggered. And so this is New York time. I'm in Mountain time, so it's going to be at right here at 22:30 my time here in Denver. There's the break, and there is the entry. So 48,025. We have 48,025. Stop loss is 48,050, and this should result in a 2R. 48,050 right there. ES breaks the previous low here. YM fails to get to a 2R right there. So it's okay for it to wick, because the way I have it coded is we have a stop loss that is above the invalidation that I'll go through on the power. But this is an example of a asymmetrical daily cycle sequential SMT. Okay, so here's the data. First off, this is going to be ES versus YM. First, quick disclaimer that this presentation is for educational research purposes only. It's not financial advice, trade recommendation, or a guarantee of future results. Futures trading involves substantial risk and is not suitable for every trader. Back-tested results are hypothetical and may differ from live execution because of slippage, commissions, liquidity, platform data, and execution rules. Again, Data is on the 15-minute chart for the daily cycle ES versus YM. Baseline includes asymmetrical and symmetrical, whereas symmetrical just symmetrical only. Backtest logic. So we're looking for ESYM daily quarter divergence setups. Prior quarter extreme timing does not need to match for the baseline. We're only looking for ES and YM that the previous quarter high or low is in the same 15-minute candle. When the entry happens, divergence must hold through the 15-minute close, and then the entry is on the next 15-minute open. Risk stop is beyond the non-breaking symbols prior quarter extreme. For ES, it's 4 ticks. For YM, we have 10 ticks. And then we'll go into the daily cycles. Here are the daily cycles. So in this data, Q1 of Monday, which is Sunday's market open, is the only quarter missing. Okay, but this is the way the daily cycle quarters work. Overall, we had 1,510 trades. Of those, 659 had the symmetrical component to it. And 1R hit rate, 43.44%, 25% for 2R, and a 3R at just under 18%. The symmetrical component did add a little bit of probability to it, but in my opinion, not enough to make a difference. All right, so the daily candle weekday comparison: Monday, Tuesday, Wednesday, Thursday, Friday. All right, this section right here is the base. Section is symmetrical, and then the delta is just the difference. So we got base 1R, symmetrical 1R, base 2R, symmetrical 2R, and same thing for 3R. So the 1R results are underwhelming for this back test. Everything is under a 50-50. Might as well just take your money, go put it on black or red and at the casinos on roulette. Okay, daily quarter comparison. So quarter 4 had the worst baseline, whereas quarter 1 had the best. And symmetrical component, I mean, it added some to the quarter 4 1R baseline, but still we're at 37% for 1R, and it's not good. Q3, actually adding the symmetrical got us just above profitable. Okay, and here is the best and worst baseline windows. Tuesday, Q2, 53%, or just about 54% actually for a 1R. That seems like it's pretty much the best window. And then best and worst for symmetrical was going to be Thursday, quarter 3, and we actually had a 63% 1R, which is pretty good. The symmetrical filter improved hit rates slightly, but okay, so the symmetrical filter improved hit rates slightly. I don't think it added much of a meaningful edge except for the baseline symmetrical windows. Like Thursday Q3 for symmetrical looks pretty damn good. Okay, so that's ES and YM. Now let's go through NQ and YM. Okay, same logic here. Same quarters. The overall comparison, we had over 1,700 trades. Of those, 522 were symmetrical. And here is the results for 1R, 2R, and 3R. And for the each day of the week, again, baseline, symmetrical. Delta is the difference between, baseline to symmetrical. We got the baseline 1R, symmetrical 1R, 2R, and 3R. On this, it looks like Monday we have a 50-50 profitability if we add the symmetrical component to it. And for the daily quarters, Q1, 2, and 3, and 4, not much of a good baseline 1R with this, but I mean, in quarterly theory, YM is more of a indicator. So to me, I kind of expected this. Okay, best and worst baseline windows. So we still had for baseline Wednesday Q2 just over a 50% 1R, and for symmetrical Monday Q2 54.55% 1R, and actually look, Wednesday Q3 56.10. So I mean, Monday's at the top because over the 1R, 2R, and 3R average, it gave us a higher score. But for quarter 1, it looks like Wednesday Q3 is actually the best for the symmetrical window. Yeah, and Wednesday Q2 is the best for the baseline. So that's all I got for you on this video. If you liked it, make sure you like, subscribe, and I'll be putting out more just like it here soon. Thank you.